Morgan Stanley is predicting that we will see an improvement in housing affordability in 2024. You're definitely going to want to watch this one. Morgan Stanley just came out with a 59-page report. That's a lot of reading, in my view, for analytics on what's going to happen with the housing market, with the U.S. economy, with the bond market. And in that report, they came out and said very clearly that we could see a major improvement in housing affordability, one of the biggest improvements we've seen over the past 35 years. So I'm going to break down exactly what all that means and what their report actually says. And before I do that, if you get some value out of this, please make sure to subscribe to the channel, hit the bell for notifications, and drop a comment if you got a question, or if you want to talk about your real estate plans for the upcoming year, or you're thinking about making a decision, you need a local assessment, a personalized assessment of what's going to be best for you, schedule a call with the link in the comments. So a 59-page report, that's pretty daunting to read. At least it is for me. I don't know about everyone else watching here. So let me give you the highlights of the Morgan Stanley report as summarized by the Resi Club, which is Lance Lambert's website and analytical blog. He's the former chief economist for Fortune magazine. So the report got sent out, and they talk about the U.S. economy, the housing market, and the bond market in 2024. And here are some of the key takeaways. The analysts at Morgan Stanley believe that the U.S. economy will avoid a recession. Incomes will continue to rise, and mortgage rates will decrease slightly, which is in line with a lot of the predictions that we've heard before. We're going to see a slight decrease in mortgage rates. As of when we're filming this video, we're seeing 7% on a 30-year fixed right at the end of November. And they also see that U.S. housing activity is going to pick up a little, and they believe that prices may actually go down in 2024. They came up with 3 different scenarios that I'll break down for you here. And then there's a big asterisk next to all this, and I'll tell you what it means for people that are thinking about transacting. So they have 3 levers, really, that can improve housing affordability. You have falling mortgage rates, rising incomes, or falling housing prices. We see incomes are obviously poised to rise. We see that mortgage rates, a lot of people are predicting high 6, low 7 throughout the first and second quarter, maybe into the high 6s by the end of next year, which is predicted by the Mortgage Bankers Association, Fannie Mae, all the other folks that make these predictions. However, the reason they think there's a poised improvement for affordability, and they're saying we've only seen this a handful of times over the past 35 years, is they expect home prices nationally, very, very key word there, to fall modestly as housing activity picks up versus 2023. And they see new home sales outpacing existing home sales. So what they did was they came up with these 3 predictions. I'm going to have Nick put the chart up here. They have a base case, a bear case, and a bull case. So if you know what a bull market means, that's when stocks rally. When a bear market is when they decline, and the base is what they predict to happen. So they have 3 different scenarios here. The base case is a 3% decline in national home prices. The bear case is a 8% decline in home prices, and the bull case is a 5% increase in home prices. So basically, they just got a big range here of what they think could or could not happen over the next 12 months. And here's the thing that they do in this report, and this is why you got to be really careful with these headlines. At the very end, they explain about why there's the bear case, the bull case, and the base case, which is their prediction. They have this last line in the report here. If U.S. home prices do fall in 2024, it's possible that many regional housing markets could still post positive home price gains. Just as this year, which we will see a positive year-over-year jump, we do see home prices falling year-over-year in several regional housing markets like Austin, New Orleans, and San Antonio. So when you hear this, all this tells me is that real estate's super local, which we already knew anyway. This is something that's always been the case. And when you look at markets like Austin, Texas, that was the #1 COVID hotspot where we saw the biggest rise in prices. Well, the graph of home prices in these markets, it kind of looks like a zipper or a roller coaster where you see it go up and down constantly. And here's the good news for people in the Northeast and specifically the greater Philadelphia area. we're not located in one of those markets. I've been through the 2008 crash. I've helped people negotiate many sales, navigate that market in all different sorts of conditions throughout those volatile times. I've seen 9/11. We saw the COVID-19 pandemic. These are times when there was this up and down in the market, and we didn't see the same peaks and the same valleys that places across the country might see that are a little more prone to housing volatility in terms of price points, because we live in a very developed area. There's not a lot of new construction here. One of their predictions is that new construction is going to outpace existing home sales. We don't have a ton of new construction unless you're in the city of Philadelphia, where they're doing smaller projects and taking up vacant land. But all the developed neighborhoods, Rittenhouse Square, Bella Vista, Old City, you're not seeing a ton of new construction inventory there, and you certainly don't see it in the more densely populated areas in the suburbs, Chester, Delaware, Montgomery County, and Bucks. We do see it in some of the outlying neighborhoods when you go further north, west, and south of the city, which is fine. That's going to be the case there. And we see those prices maybe are a little softer than existing home sale prices. So what I know is, for the people that are thinking about buying and selling, let's go to the Zillow prediction, because this is another chart Nick's going to put up in the video here. Zillow came out and they revised their predictions in 2023 in October to what's going to happen over the next 12 months. And it's all color-coded. So if you look at the chart here, blue means you could be going up as high as 7% on home prices. Red means as low as 7% in terms of an increase or a decline. So it's basically a 14-point range, with 0 and no change being the middle number. And that is basically a clear color on this chart. If you look at this chart, you're not seeing a lot of volatility anywhere. It looks like it's going to be a pretty stable market in 2024. And that backs up a lot of the predictions coming from Mortgage Bankers Association, Fannie Mae, Wells Fargo, Goldman Sachs. They're all believing we could see prices go up 0.6% up to as high as 4.1%. And then we've got other places like Zillow, who's calling it a negative 0.1%. Moody's, who's a little more pessimistic, they're down 4.4%. And Morgan Stanley, who's saying down 3%. So basically, we've got all these experts all over the place who are making these predictions, and it's going to be super local. Morgan Stanley even acknowledges that in their report. So here's my advice. If you're thinking about selling a home, I'd be having a strategy session or a planning meeting now with an agent who knows what they're doing, who knows how to sell properties, and I'd be asking them what's their local outlook. Have them show you what's going on locally in your market, and it's going to be based on what's happening with inventory, what's happening with mortgage rates, which is going to be the same across the country, and what's happening with the local economy. Are jobs coming or leaving the marketplace, as an example? And with inventory especially, we even see it here in the greater Philadelphia area that the suburban markets are very different than the city market. And that could be the case in other places. And if your agent can't navigate that, you might need to find someone who does. Now, the flip side is, there's going to be more competition if rates do go lower. We're going to see more sellers come to the market because most sellers end up being buyers on the other end. So if you've already got your place lined up to go, you might want to think about moving your time frame up to list and sell your home. Because when there's less competition, we've seen rates drop substantially over the past 2 weeks here, down to high 6-7% right around the Thanksgiving holiday. That's good news for you as a seller, because buyers can afford more. Their affordability's higher. The longer you wait, there might be more inventory that comes to the market, which you could be competing with. Now, the flip side is, for buyers, waiting, if you're in a rental as an example, well, you're not going to be waiting for rates to come down with these rate predictions. Most people aren't predicting anything more significant than high 6s on rates. And if prices stay flat or do go up, then you're losing out on equity, because you can build equity with that payment. So again, all the more reason to have a planning meeting and understand financially what it means to get into these properties, so you can get a better feel for what's going to be right for you, your household, and all the people that are affected by the decision of buying a home. These kind of articles get very dangerous, because you're seeing there's basically a big spread. Zillow's got a 14% spread about what's going to happen across the country. On these predictions here on the national numbers, we're seeing anywhere as high as a 4.1% increase in prices and as low as a 4.4% decrease in prices. That's a spread of 8.5% of it could go one way or the other. So what we know here is that you've got to get the local information, and Morgan Stanley says it right in their report. So you should be getting in touch with the local expert that can help you navigate all this, whether you're on the sell or on the buy. Don't read the headlines, trust your local agents.